Welcome everyone, I'm Investing Innovations. This is Ryan, and I'm here to talk about fundamental analysis today. Before we do that, though, I would like to take a look at our current market. So, just to go over to stockcharts.com, take a look at the S&P 500, just a little bit as a gauge for our current market. So, if we go to a little bit of a higher time frame, let's give it a 2-year time frame, we can kind of chart it out to look. We've been trading in this range for past couple of days, and I think that this little sandwich could come to an end very soon. We've been stuck between that's the 50-day moving average, by the way, and this 420 resistance, or to be more exact, about 419. It's really hard resistance, and we've bounced off of it every time. And then we have right here this 404, 405 support that comes in whenever we hit it. And we've just been trading in and out of that. Personally, I do not think that this is a bottom for the current market. I think that we will continue to keep going down from here. Uh, I want real confirmation that if for a bottom, and I do not think we're there yet. Now, next up in economics news, I want to talk about we have initial job claims this Thursday and CPI data coming out this Friday. Make sure to look for both of those. As I've always stated, we are in a data-driven market, and those two could. I think CPI could definitely affect the market. Initial jobless claims, I do not think as much. Okay, now onto the lesson today. So here we have ticker, like easily one of my favorite resources, and we're gonna get into valuing companies. Last time we talked about how to value companies kind of on its own, which is called a bottom up approach. Today we're going to take a look at a top down approach, which is we're kind of comparing companies and we're using ratios. So, first of all, I want to talk about what are some catalysts that we can take advantage of when trading long term on stocks. First up is what we call revenue growth. Um, yeah, or sorry, some big points I would give to the company. So revenue growth. If just taking a look at Ford right here, let's take a look at their financials, and we can see their revenues. It's okay, not anything crazy to look at, but if we see consistently increasing revenue growth, that's a good sign. Gross profit margins, if their margins are getting better, that means more profits. That's good. EBITDA, which stands for earnings before interest, tax, depreciation, and amortization margin. And what that is before a company has to pay taxes on what they earn, before they have to, before a lot of it goes away, it's that raw number that tells us really how they performed. And I think that EBITDA is very important. Number four is cash conversion, so that you can see that over on their cash flow statement. And we can see that, if you want to see their free cash flow, cash from investing, all of that is here. By the way, ticker is completely free. All you have to do is make a free account. And number five is dividends. So if a company has very high dividends, that means they have a lot to give away, because dividends are like extra earnings, extra profit that the company gives to its investors. So very high dividends, that's a pretty good sign. So a little bit of a strategy here we got going on. We're taking a look at a little bit of a broader scope, and we're going to use Ford as an example today because you'll see why. So step one is to kind of a basic company and industry analysis. What are their current competitors? What is the economy we're looking at for industry sector, kind of the world? Is the sector really hot right now? And we're kind of really looking in comparison to competitors Uh, you know, in that sense. Oh, and what are their strengths and weaknesses as well? So, in terms of Ford, the car industry is definitely something to look at right now. Ford is moving into electric vehicles, and I think that that's definitely something to be explored. Uh, sorry, let me check, make sure I'm streaming. All right, that's a lot of companies are definitely going down that route right now. So yeah, competitors, they have a lot of competitors, but I think Ford is definitely bringing the game with their new EV vehicles. Um, I think it's a hot sector. All right, step two is we go in depth on their balance sheets, PE, some of their ratios that we're gonna go over in just a minute, and then we'll go over what's dragging the company down. So, like I said, when you compare, I'll let this. Um, I might have to go for another website for this. Yeah, okay. I got one more website I gotta check out. Yeah, Wallmine.com. Also another free website that I love to use. Gives you their financial information very easily. Oh, go to tickers and we check out Ford. And we can see if they're overvalued or undervalued. So if you take a look at their PE ratio, they're only trading at 4 times. By the way, PE ratio is the price of the stock divided by their earnings. They're trading at 4 times the price of the or ahead of earnings. So that's pretty big. It's definitely something to behold these days because a lot of companies have very high PEs and they're very overvalued. Next is price to earnings growth. So that is the price of the stock and then the growth of the earnings, and that is right here. Um, yeah, and that believes that's pretty good. Next up, uh, a dividend yield would also be good to look at. I don't. Right here. 2.23%. That's pretty damn good. Um, yeah. And then let's take a look at some of their debts and liabilities right now. So we take a look at their balance sheet and we can take a look at their liabilities. How's their liabilities? Pretty high, right? They're not going down. Now, usually I would give a company a lot of credit if they're bringing their liabilities. Let's check out their debts. Total debt. Okay, they're bringing it down. I give them a little credit here. All right. Next up, let's compare. Let's take a look at their competitors. So Ford, we see that right here that compared to other car companies, they have some pretty damn good valuation right now. 6 PE. I mean Tesla and some of these are just absolutely wild right now. Um, yeah, that's crazy. You can take a look how they compare in other industries, which I really like a lot. Yeah, sorry, this was right here. Their PE ratio is actually coming down a lot. You can see that over the course of multiple quarters. I that's what I really like is that you can choose a time frame to look at. That's really good. You can take a look at estimates too, which is also a good way to get a little bit of a hold of a value of a company, of whether it's undervalued or overvalued, is to see what other professionals think as well. All right. Next up, we take a look at. Give me just a second. Maybe we'll take a look at their price to book sale, which is which is their book value. So I get, yeah, price to book, which, oh, and by the way, some of these have graphs, which is really nice. It is coming down, but I mean, it's at 1, which is, if it's near 1, or it's, that's usually a pretty fairly valued company, which means that, that's pretty good. Just going through some other stuff. If you want to take a look at their profit margins, which is 13%, which is pretty good. I wouldn't give them anything crazy for that, though. Um, their their debt to assets, though, where's that? Their debt, yeah, I think their debt is kind of dragging them down. Their EBITDA margin is not that good, and I think that their stock price is pretty low right now. So I'm honestly really like Ford a lot. That's just me personally, and not valuing them as we are right now. All right. Um. Oh yeah. So next we're gonna take a look at. We're gonna go back over here and take a look at like their income statement. So we can take a look at their change year over year, which is absolutely crazy right here. They went from oh whoops. They went from negative to absolutely in the positive for their income percent change. As you can see, they have a lot of negative in here, but I think they're starting to pull through now. So honestly, I would think that this is a pretty undervalued company in my opinion. Now, just to kind of think it out conceptually, do I believe in Ford? I think so. I think they're contributing a lot right now, and I think that they could provide a lot of value in the future. But some big points we want to touch on or are how do they handle their liabilities? Are they producing their assets? And are they covering their debt? Um, which can be answered a lot here. Some good and you have to think what drives the stock or the industry that it's in, and a lot of it is new car models, events, and or earnings. So that kind of brings us to catalysts, which are things that can boost this or negatively impact the stock's price. So earnings, of course. There's an thing called Analyst Day, when analysts basically they give price targets or they say whether they're holding or selling for large institutions, or if they have an investors conference or meaning there's uh, they hold a like a board with all the top investors and shareholders, and they come out with probably news or something of the sort. So now let's take a look at their chart. If we go over to stockcharts.com, another really good free resource, type in Ford. Let's take a look at their stock. I just want to chart this up real quick. Just based off of a long-term standpoint, their RSI is at 50, so not anything too, uh, you know, overvalued, but it's not undervalued. It's underneath the 200-day moving average and the 50-day. I think it could use the 50-day as resistance. Definitely have some resistance around here. But what I would like to see maybe an entry is probably around here. And by the way, if you are not familiar with technicals, please check out our YouTube. I have some other archived meetings that should be up there where you can become really acquainted with charts. Very important. Our MACD is really is popping off right now. Let me actually go to a little bit of a higher time frame. Oh yeah, we have a little bit more to work with over here. Let me go to even farther. Oh wow, okay, even more. Now let me retrace this real quick. Oh, I'm in the sorry, someone scared me. I'm in the middle of retracing. So if we retrace right here, we can see that right about here is our 61.8 region, which is usually a pretty key level. Right here would be probably about a good entry I'd like to see for a long-term entry right here, right about here. So yeah, that is a lot of good stuff. Sorry, just checking out what I like to see. So that's kind of our fundamental section today. So let me kind of talk a little bit about some long-term investments I'm really interested in right now. So we're gonna talk about a lot of different sectors right now. Um, one of my favorites being obviously the tech sector. I'm really interested in AMD and Nvidia. In fact, let's take a look at AMD. So AMD very recently has been clearing. Let me go back to 2 years actually. It cleared the 100 mark. And you see that 83, that's a very key level. And we actually bounced off of that. And I think we have some big resistance incoming. But with that 50-day moving average could mean a lot right here. Because it's like that 100, that very even 100 level. So I'd like to see this, low 80s, maybe even high 70s, and I will be more than happy to make a good position here. But yeah, we've been holding above this 100 key level, and I'm just a big fan. So just to kind of think out some stuff conceptually, what I think is will be big up and coming will be in the real estate industry would probably be Airbnb. I think Airbnb is an absolute booming market, and I think that that's a really good company to invest in. Um, Communication services, Google. I own a Pixel myself. I think that that's a really good phone, and I think Google just king of the browsers and all that good stuff. Twitter and I mean, with all the recent stuff happening, I think Twitter is definitely something to watch out for. AT&T. I think that they have really good dividends. Good long-term company. Next up, consumer staples. The only one I have here is Costco. I really like Costco. Very hardcore members. I mean, you think about anyone that has a Costco membership, they love it. They have it for a long time. Our industrials, we have General Motors or Lockheed Martin. I think Lockheed Martin is really good. A government contracted military defense company. Really big fan of them. Just to show you the little chart of them, LMT stock, they did really well today. But, in the past 6 months, they've been up 30%. Pretty good. Our consumer discretionary up next. What we would have General Motors, Ford, Target, and Home Depot. Like I said, Ford, great. I love Target as well. Next up, our industry or our energy sector. I really like COP, which is ConocoPhillips, ExxonMobil, or Chevron. With the current gas prices going up a lot in the United States, I think that gas will become even more and more valuable, and these companies will profit a hell of a lot more. So, financial sector, I really like Bank of America. I like Berkshire Hathaway, Charles Schwab, Citibank, Capital One, Invesco. I think all of those are really solid picks. So yeah, that's my watches. If you have any questions, please ask me and I'll see what I can do. Other than that, I'd say that that was a pretty good meeting. Or if there's anything if there's anything else you want me to cover, I'll cover it. If not, then I think that's pretty good. All right, thank you for coming out.